I'm Greg Hunter. Welcome to USAWatchdog.com. We have a big 1-2 punch. He is the founder and CEO of Schiff Gold and Euro Pacific Capital. He is Peter Schiff. Peter Schiff, thanks for joining us again on USAWatchdog.com.
Thanks, Greg. Always a pleasure to be with you.
I want to talk about, and I'm sure we have a brand new debt ceiling that we've announced. We have a debt deal. Yay, everybody's happy. And then we have on the heels last week of Mario Draghi, the head of the European Central Bank, almost all but guaranteeing negative interest rates and more money printing. Is this a good thing?
No, it is a terrible thing. And, it's not even a debt ceiling because they raise it whenever we approach it. So it's not really a ceiling. And, interestingly enough, not a lot of people know the origin of the debt ceiling. And the reason that Congress first enacted one is because shortly after the Federal Reserve was established in 1913, America found itself in World War I. And in order to pay for the war, the government wanted to borrow money. And they wanted to borrow money from the Federal Reserve, which was illegal based on the original Federal Reserve charter. The Federal Reserve was not allowed to buy any U.S. Treasuries. So that was a problem. And so they amended the Federal Reserve Act to enable the Federal Reserve to buy U.S. Treasury bonds so that it would be easier for the government to finance World War I. Now, when Congress did that, they were worried that with access to the Fed, the government would borrow too much money. And so they passed the debt ceiling. And the debt ceiling was supposed to limit the amount of money the government could borrow now that it could borrow from the Fed. And that was the origin of it. Of course, ever since then, they raised the ceiling. And the original Congress was correct to worry about how much debt would be created if the Federal Reserve was allowed to buy it. But the mistake they made was in enacting a ceiling that future Congresses could just raise with impunity, because that is what they've done. And, this phony crisis, it's not about not raising the ceiling. That's the solution. The crisis is continuously raising it. What we need is some congressmen, some senators with some backbone not to raise that debt ceiling. President Obama keeps saying we need to raise the debt ceiling so we can pay our bills. No, he wants to raise the debt ceiling so we can avoid paying our bills, so we can keep borrowing money instead of paying our bills. What we need to do is not raise the ceiling and start paying our bills and stop running up the debt.
And actually living within our means is what you're saying.
Yes.
Heaven forbid that Congress would have to live within what the $2 or $3 trillion they collect every year from us.
Yeah, the most irresponsible vote that politicians make every year is to raise that debt ceiling. And you know what? Anybody who votes to raise it should not be reelected.
Well, John Boehner, that's his big gift to, I guess, Paul Ryan and President Obama. They get this clean debt ceiling raise, and to me, when is this going to start affecting our bonds? When is this going to start affecting our currency? When is this going to start affecting gold?
It's going to. Look, everybody is still, brainwashed. They believe the Fed propaganda. The Fed has been talking about how great the recovery is and how it's getting ready to raise interest rates. None of that is true. There is no recovery thanks to the Fed. All there is a gigantic bubble that has prevented a recovery from taking place. And the only reason the Fed is pretending it's going to raise rates is so it can pretend that the economy is strong enough to withstand that. But basically, the Fed can't do that. The Fed is going to do more quantitative easing. They're going to do QE4. And, all it's going to do is weaken the economy further. The economy is in worse shape today than it was prior to the financial crisis, thanks to the Fed.
And do you think that the next is the straw that breaks the camel's back? It's going to be like a log that breaks the camel's back. Is that going to be the announcement of QE4 and negative interest rates?
Well, I don't know what's going to be that final straw. There's so many of them already piled up on this camel. It's amazing that he can still stand upright. But, at some point, people are going to begin to get the picture, right? That this is not a healthy recovery, but a bubble, that there is no end game, there is no exit strategy. The Federal Reserve has no ability whatsoever to raise rates, that it is impossible for the Fed to shrink its balance sheet. The balance sheet is going to grow to the sky. It's going to go to $10 trillion, maybe by the end of this decade. Right now it's $4.5 trillion. And when people perceive that reality, they are going to run from the dollar. The only reason that people have been buying the dollar is because they actually believe the Fed. They thought the Fed was going to raise rates. They thought the Fed was going to shrink its balance sheet. They actually believed that there was a tightening. It's not going to happen. And not only that, when the dollar really starts to implode because they have to unravel this dollar trade, consumer prices are really going to push higher in the United States. We're going to blow through that 2% ceiling in the inflation, and the Federal Reserve is going to do nothing. Even if inflation as measured by the CPI goes to 2.5%, 3%, 4%, the Federal Reserve will do nothing. Just like when unemployment went below 6.5%, they didn't lift rates. When inflation goes above 2%, they won't lift rates either. It doesn't matter how high inflation goes. They can't raise rates without bringing in a financial crisis worse than the one we had in 2008. Now, maybe eventually they will do the right thing, and we will have to swallow that bitter tasting medicine. But unfortunately, we're going to be a lot sicker when we do, and so the medicine is going to be a lot worse.
You know, they're talking about they're going to raise rates in March of 2016, and I think you're going to raise rates in an election year? Really? You're going to raise rates? And you're saying that's kabuki theater. That this coming out, one Fed president, putting against the other, saying, "Oh no, we shouldn't raise rates." Oh yeah, we should. Is that just kabuki theater?
It's all right. It's all part of the show to pretend they can do something which they have no ability or intention to actually do. Look, the Fed didn't raise rates in March of this year, so why would they do it in March of next year? The economy is going to be much weaker March 2016 than it was March 2015. I mean, if you look at the data that's been coming out, all the data is consistent with recession, not expansion. In fact, if the Fed were to actually raise rates, this would be the first time that they actually raised rates into a slowing economy. I mean, this is not something what the Fed does. Normally, the Fed would be stimulating with economic numbers this bad. The only ones that are still holding up are the housing numbers, and they're going to implode at some point, and the jobs numbers, which have just started to roll over. But, of course, the employment numbers are lagging, not leading indicators. And what nobody has wanted to acknowledge beneath the surface of these 200,000 a month non-farm payroll numbers, it's all part-time work, it's temporary work, it's low-paying service sector jobs. We've had a collapse in the labor force participation rate. That's why the unemployment claims are so low. You can't get fired unless you get hired. And we're not hiring a lot of people. People are just leaving the labor force. And that is really what's going on. And people who are giving up full-time jobs in favor of part-time jobs, none of this indicates economic strength. It all reflects economic weakness. But you know what? I think by early next year, this is going to be a horrible Christmas. Americans are broke. They have no money to shop. Inventories are already bloated. I think there's going to be huge markdowns. In fact, if you really want to get some good buys, don't buy anything this year until after Christmas. But I think there's going to be a lot of layoffs come January, February in the service sector. And a lot of these part-time jobs are going to disappear, and you're going to see a big increase in the unemployment rate. And how is the Fed going to raise interest rates then? If they couldn't do it when unemployment was falling, how are they going to do it when it's rising?
People like Harry Dent and David Stockman, a couple of big voices in the financial world, say that we're going to have huge deflation because the bonds are no good. We'll have, I'm oversimplifying their thing, but the bonds are no good. We'll have debt destruction. We'll have this destruction of these bonds around the world, and gold could be $300 an ounce. And you say?
That's not going to happen. I mean, there will be deflation in terms of gold. So if you want to price things in gold, stock prices are coming way down in gold. Real estate prices are coming way down in gold. Consumer prices are coming way down in gold. Commodity prices are coming way down in gold, right? They're not going to come way down in dollar bills because the government can create as many of those as it wants. There is no limit to the number of dollars Federal Reserve notes the Federal Reserve can create out of thin air. It doesn't even have to print them. We used to be limited by the physical stock of paper, right? Now that doesn't even limit us anymore because we just create them out of thin air on a computer. So they can create trillions or whatever number comes above a trillion, a zillion or whatever it is. I'm not even sure how to count above a trillion. But we might find out, unfortunately, the hard way. But, there's no limit. And I don't know why a guy like a Harry Dent would have so much confidence in a Federal Reserve note. I mean, have no confidence at all in the U.S. economy. Think everything is going to collapse. But somehow, in the middle of all that rubble, the dollar is going to emerge supreme. Why would that be? I mean, there's no real precedent for that every country that has gotten itself into the kind of trouble that we're in, only on a smaller scale, there's always been a collapse in the currency. Now, if Harry Dent wants to go back to the 1930s and say, well, look what happened in the 1930s, we were on a gold standard during the 1930s. And even though Roosevelt devalued the dollar, it was still gold. We went from $20 an ounce to $35 an ounce. But there's no gold backing up the dollar now. None whatsoever. So you can't go back to the experience under a gold standard and say that's going to be repeated under this fiat standard. So in some respects, Dent is right. I don't know if Stockman is saying the same thing. But anybody,
I've had him on. He's saying that, gold might be better later, but, the dollars, load up on dollars and cash is going to be king. Basically, I mean, I'm probably oversimplifying their thing, but they're not Stockman is not a fan of gold at the moment.
Yeah, I don't know why cash would be king. And of course, if Harry Dent's, if what he thinks is going to happen happens, in order for it to happen, the U.S. government is going to have to default on the Treasury bonds. It's going to have to refuse to pay. It's going to have to allow banks to fail, not bail them out, let them fail. In addition to letting the banks fail, the government is going to have to let the depositors lose their money. The government is going to have to come clean and say, we have this thing called the FDIC, but it's broke. So I know you deposited your life savings in this bank, but you know what? You've lost it. Right? Like John Belushi, you screwed up, you trusted us, so you got no money. The government is going to have to allow pensions to fail and not bail them out. The government is going to have to allow voters to lose a tremendous amount of money and do nothing about it. The government is going to have to tell retired government employees they're not going to get their pensions. The government's going to have to tell people on Social Security, hey, I know we promised you all these benefits, but we're too broke to actually make the payments, so you're not going to get what we promised. That's what's going to have to happen in order to make Harry Dent right. See, what I think is going to happen is the politicians are not going to shortchange anybody. They're going to pay everybody in full in money that probably doesn't buy very much or might not buy anything at all, because politically that makes a lot more sense to just print money and hope for the best, because that's all they've ever done.
And you are a holder and a buyer of gold. You don't think the price, and I'm not trying to get you to make up some big prediction, but Charles Denner said on the show this summer that I didn't think gold was going to go down, very much. He was right. He was right. He thinks it'll go up sometime next year as things get worse. And to your point, as they print more money, he says he thinks it'll go up next year. What do you say about the timing, the trend of gold? Is it going to go down from here, or can it go down from here? Will it go up next year, like Charles Denner says?
Look, it could go down. Before it goes up, I don't know. Look, gold, while we were on a gold standard, you needed $20 to buy an ounce of gold. And then Roosevelt devalued, and now you needed $35 to buy an ounce of gold. And that's where the price remained until Richard Nixon. And Nixon devalued the dollar a couple of times, and I think at the end it was about $42 an ounce before they gave up. And they said, you know what, the dollar is no longer backed by any gold. And so now gold is $1,175 an ounce. I mean, there's an obvious trend there, and that trend is up. And gold is not going to stop rising now. Why should it buck that trend? It's been rising ever since 1971 when we left the gold standard, and we're not back on it yet. And in fact, once we left the gold standard, we removed all discipline from the growth of government spending, government debt. And as long as we continue to borrow and print money, and run these debts, and we're going to raise that debt ceiling, gold is going to continue to go up until it eventually goes straight up like a rocket ship. Everybody's been waiting for liftoff. When is the Fed going to lift off? It's gold that's going to lift off. And when that rocket ship, lifts off, you better be on it.
Peter Schiff, the CEO of Euro Pacific Capital and also Schiff Gold. Peter Schiff, thanks for coming on and giving us a staccato update of what's going on in the markets. Thank you, sir.
Thanks, Greg.